Morning, everybody. Good morning, buenos dias, bienvenidos, whatever you want to call it. Great to see you guys today. Hope everyone's doing well. Owen, welcome to the room. Nice to have you in here. I heard you'd be coming. Guys, I'm Mark. I talk about the same thing every day. Good morning, Hamid. Good morning, Paul. Good morning, Cav. I am the most boring guy in the universe because I say the same darn thing every day, guys. I repeat the same rules. I talk about the same looks. We discuss the same advantages because repetition creates recognition, guys. And that's what we're going to do today. We're going to talk about the same darn thing we talk every day. There is a path to get to where you want to be. I'm going to give you the path of least resistance. I am going to hand you a plan that optimizes your chances of success. I'm going to give you an Excel spreadsheet where you can study the patterns that give you an edge. And guys, I'm going to be available for feedback all day long, so don't be shy. But first, we go to news. There was a medium impact at 8:30. Fed Chair Powell spoke, and it spiked just a little bit. But not really enough to make anything happen. Then they went right back into their range. But knowing when news is being released, specifically high impact news, guys, that is where your patterns can get disrupted, if you will. And that's all trading is. It's just patterns, guys. It's a couple rules that you can prove win more than it loses, guys. It's the same look every time. It's the same advantages every time. It's the same entry every time. Golly, trading is boring. But when you do it well, sure is profitable, guys. So what we're going to do in this classroom is what we do every day. I'm going to stand up and turn off this heater because it's drying my eyes out. And now we're going to get to work. Hey, good morning, Ron. Guys, I'm going to talk about rules for two different platforms this morning. So if you're one of my NinjaTrader users, you are going to get everything that you need to be successful with the software by the end of the first hour. If you are TradingView, you are going to get everything that you need to be successful with the software by the end of the first hour. So I'm going to give rules for both platforms, guys, but I want you to remember, and here it comes, they're not the same. If you're a NinjaTrader user, guys, you're using Nexgen dynamic Renko bars, you have Fibonacci. If you're a TradingView user, you're still using a lot of the T3 indicators, but you're using minute bars. There is no Fibonacci. So there's different rules. I'm going to give you rules for both. Everybody in the room has the ability to simulate. Rather than go after the market with your hard-earned money while you learn something new, you can get on Simulator, guys, and you can post pictures in class until you're sure you have the correct rules, until you're sure that you have the advantages, until you're sure that you can read the indicators. And that's what I'm going to do, is I'm going to teach you how to read them, guys. The goal is that you don't practice the wrong trades. So when you practice entry, practice the correct entries. When you work on your management plan, try to practice the logical management plan, guys. Getting lucky on Simulator is one of the biggest reasons traders move forward and die in a live environment, because the brain doesn't know the difference between luck and an edge. And when you focus on the edge, the advantages, life is much easier. The next thing is it says, oh, no, I'm not done with this, guys. Post in my room. That's the first step in getting to where you want to be. If you've been watching the chat for the last hour, you'll notice that people keep posting in the room, that I keep seeing pictures. Sometimes it's not a trade, right? People posting in the room, hey, this is what I saw. This is what I did. This is where I was. This is why I did it. Hey, Mark, did I do it right? Did I lean on advantages? Did I take the right entry? Did I read my indicators properly? My job, my sole purpose in life, guys, is to help you read your indicators better so that you can make good decisions. Feedback is crucial. And I want you to think of me as the same way you would think of a coach if you played sports, guys. When your coach is on the sidelines watching you perform, whether it's baseball, football, soccer, whatever you do, he is or she is watching you and prepared to give you feedback to do it better. And that's what I do. And that's the first step, guys. Post in the room. Don't be shy. The second thing is stop making trading so damn hard. Keep it simple. Keep it focused. Learn one trade. Get really good at one trade that you can prove wins more than it loses, and then add another trade, guys. The futures markets trade billions every day. It takes $400. That's it to be a successful trader, to be in a six-figure income. So keep it very, very simple and learn the looks, guys. When I mention that all we do is patterns, it literally is the same thing every time. It's a specific look on one chart, it's an entry on the other chart. You have to learn those patterns so that they become easy. So that is the second thing, guys. Use the spreadsheet that I'm going to give you. So right now I'm going to give you two gifts in the room. I'm going to drop them in. If you are brand new, I'm going to encourage you to take the ones that pertain to the platform that you're using. So what I just dropped in the room, in the spirit of keeping it simple, are the Keep It Simple plans, the KISS plans, guys. This is for TradingView. It's going to give you workspaces that eliminate all the noise. It's going to tell you exactly how to read your charts, exactly how to enter the market, and give you a checklist for entry. If you are a ninja trader, yes, I'm going to give you a plan that tells you exactly where to find your rules met, gives you a checklist for entry, guys. Like everything you need to police yourself, to make sure that you're leaning on the advantages. The second thing is, if you are in NinjaTrader, the Nexgen tracking sheet is yours. There's all your rules in green when they're not met in red. And then, guys, in green is over 500 pictures of Nexgen users embracing the pattern. If you take 30 minutes of your life to scroll through these pictures, to look at them, what you're going to realize is that people from all over the world in different walks of life are taking the same damn trades. Because it's just a pattern. Sorry, pardon my French. I think I'm wound up this morning. In TradingView, there's your looks. Everything you need, guys. I can't stress that enough. I'm going to give you the rules. You're going to simulate. You're going to keep it simple. We're going to move forward, guys. You will have everything you need to be successful. And my job, my goal, my whole reason for being is to teach you to read your charts. Because it is reading your charts that's going to have you recognizing advantages. It's the recognition of advantages that gets you into a trade. And you're going to find, and nobody likes this, that 90% of your day is doing nothing. 90% of your day is reading your indicators, guys. 90% of your day is waiting for that pattern that you can prove wins more than it loses. 10% of your day will be actively trading. So just as a for instance, if you spend 6 hours in your chair today staring at your monitor, you're likely to be active 36 minutes. I would say it's about half of that, maybe 18 minutes, where you will actually physically be entering and managing trades. But once you get good at reading your indicators, guys, once you can read your charts, you're going to understand three very key concepts. You're going to understand where the market is likely to continue. These likely to continue spots are where you will be entering high probability trend trades. They are where the market is most likely to bounce and continue in the direction of a trend that has already been established. You're going to understand where the market is likely to go using key Fibonacci areas, using zones. And this is great for profit taking. And then you're going to understand where the market is likely to stop. These are what we call termination conditions. And a termination condition does exactly what it sounds like. It could terminate a trend. It could stop forward progress. It could pull you out of a position or create a very quick loser when you trade directly into them. You'll know right where they are long before you get to them, but then you'll have to make the choice not to choose into them. When I talk about teaching you the rules for when it's okay to trade, guys, it's okay to trade when the rules are met. It's okay to trade when you have the advantages that you need. It's okay to trade when you have an edge. Trading is about probabilities. Trading is not about winning every trade, but you can take a pattern, you can define it through rules that create advantages, and you can say to yourself, this particular pattern, this is NinjaTrader that we're starting with, guys. This particular pattern typically wins up to 70 to 80% of the time if you follow the rules correctly. Now, if you don't understand how to identify strong triggers that create the advantage of momentum, you're going to struggle having that edge. If you don't learn how to identify a termination condition, making sure you have a clear path, how could you possibly follow the rules? And if you can't define your entry with rule number 3, knowing precisely where to get in and put your stops, guys, you can't follow the recipe for a trade that has an edge. So we're going to go through these 3 rules this morning and make sure that you have clarity. If you don't, just type in the room and let me know. We'll cover it. These 3 rules happen on only 2 charts. There is a big chart. This is your slow chart. This is a broad stroke of a brush, guys, and it shows the overall opinion of the market. Your large chart is very difficult to see change on. Your large chart is slow moving, but it only takes 1 bar. The most current bar, I've got it squared here, outlined in yellow, and from this 1 bar, you will be able to define the direction the market is going. You'll be able to define the momentum in the market, and you'll be able to define any areas that could be problematic. 1 bar. Rules 1 and 2 are met on a large chart. 66% of the good stuff comes from the large chart. Your small chart is where you go when the rules are true on the large chart. This is where you'll define your entry. This is where you will buy or sell a pullback at an area inside of triggers, guys. This small chart shows the inner workings of that 1 bar. This is going to allow you to reduce risk, and this is going to allow you to maximize profit potential. We use the 2 charts for the world's greatest metaphor, guys. Who are you trading with, or who are you trading against, guys? The large crowd is the large chart. These are the institutions, the big money, whatever you want to call them. But they create trends, and they create that momentum, and they react at those key areas, guys. And the large crowd typically wins. Your small crowd is the small chart, and the small crowd, these are fighters. They fight against everything the large crowd wants, but they typically fail about 70 to 80% of the time when the large chart high probability trend trade rules are met, which means that your rule for entry is pinpointing where their failure is most imminent, guys. That is right where the market is likely to continue with everything the large crowd wants. That becomes your entry for the highest probability trend trade. We use indicators. That's what we're here for. We're a software company. Both charts will have areas, guys. Areas have names. You don't have to know what creates divergence or how a fib comes to be. All you need to know is the names, guys. When you see a magenta line print off of a pivot, that's a divergence high. And a divergence high can behave as resistance, and all it means is that there is a loss of momentum in the market, guys. Every time you see divergence, think loss of momentum. You'll see Fibonacci resistance. Behaves just like the name suggests, as resistance. When the market is moving up, it could stop it. It could create a bounce. You're going to see yellow 1-to-1s. These are kind of fibs in the moment. When the market is trending up, they can behave as resistance. And if the market's trending down, these yellow 1-to-1s can behave just like this blue support line. Fibonacci support could stop the market, could create a bounce, could cause a reversal, guys. And you're going to see all of these before you ever get to them. And then divergence lows, the opposite of a divergence high. It just means there is a loss of momentum at a pivot. I would encourage you, learn the names: divergence high, divergence low, resistance, support, 1-to-1s. These are going to come into play on both charts. Also coming into play on both charts are trigger lines. We have 2 trigger lines, guys. There are the small trigger lines, but it's actually 2 lines that create it. They will be solid. They're a fast-moving average. And we have large trigger lines. These are dashed. They're a slower-moving average. Trigger lines will define momentum for rule number 1. Trigger lines will define termination conditions for rule number 2. Trigger lines, specifically the large, will define entries for rule number 3, guys. Trigger lines will show up in everything that you do, And all you need to know is that these are small and these are large. So we're going to get into these 3 rules, guys. 3 rules. When the rule is true, it creates an advantage. When you have the accumulation of the 3 advantages, you have a trade. You have a trade that you can prove wins more than it loses. You have a trade that creates an edge, an advantage. And guys, when the rules are true, life is good and trading is easy. And it all starts with strong trigger lines. Rule number 1 says that your large chart must have strong trigger lines. On your large chart, if the background is green, the trend is up. You're looking for rules to be met for high probability trend trades long as the brand new user. If the background is red, the trend is down. You're looking for high probability trend trades short as the new user. Now this lesson is going to come in handy, especially if you were watching the market this morning. In order to have strong triggers up, the small triggers must be green. The large triggers must be green. And the smalls must break above and away from the large triggers. And guys, here's a key word. The large triggers must be widening. They must be opening up. They've got to have space between them and angled in the direction of the trend. Flat triggers produce no momentum, guys. They've got to have that angle to them. And when you have strong triggers up, the odds are favorable for the market to continue up. Odds favorable momentum is the first advantage that strong triggers give you. In a downtrend, both small and large must be red. Guys, if the colors don't match with one another or the background, you're in a transition. You can't define the momentum, but when they are all the same color, when they are wide and angled down, you have strong triggers, guys. And strong triggers means that the odds are favorable for the market to continue down. Odds favorable momentum. You're going to see it annotated on charts, OFM, all day long, guys. Odds favorable momentum to the upside. Odds favorable momentum to the downside. This is very difficult to stop when you have it on a large chart. This is the look that you're going to rely on to help you break key areas when the market's in a trend. This look will even cover a lot of the mistakes that we tend to make as new users. But momentum isn't a forever advantage, guys. Sometimes it's there and sometimes it's not. When the small triggers work their way back inside of the large triggers, when they come together, this is weakness. And weakness clearly is the opposite of strength, and so that you should feel like the advantage is gone. When I have weakness, anything can happen up or down. And a lot of times you'll see that annotated on a chart. ACH, guys, you're going to see OFM, you're going to see ACH. Only one of them gives you an advantage. And I'm going to show you. I'm bringing up pictures today, guys. I know we have new people. Defining momentum, guys, and we're just going to go from left to right. When the small triggers work their way inside, I instantly think to myself, anything can happen. My advantage is gone. This is not a market that's likely to continue in the direction of the trend. Sure enough, a reversal. And then it opens, the colors match, the space between, everything is wide, and it's odds favorable momentum. And guys, this tail on a large chart, one bar, or shadow, or wick, whatever you've been brought up to call it, this is the fight on the small crowd, the small chart. You're going to pinpoint right where that tail is most likely to form with that momentum. That's going to become your entry for the highest probability trend trade. Momentum carries it up to those darn anything can happen triggers. There's a reversal. It produces odds favorable momentum, another tail, another opportunity. And then we get into where the colors don't match, where the smaller down and the larger down, but the background is green, or the smaller up and the larger down. And guys, this is a transition. This is where the large crowd is fighting one another, where the buyers and sellers are trying to figure out who's going to win. Very often this happens in between Fibonacci areas. And guys, this is where sitting still pays dividends. This is where doing nothing creates the advantage. This is where new users are very tempted to predict what the market will do rather than waiting for rule number 1, because nobody likes the 90%, guys. But this is a huge red flag to stay out. Wait for one side to create the advantage, and then go look for rule number 2. So strong triggers Are we good with it? Colors match, triggers wide, separation, odds are favorable, whether it is down or up or down or up, guys. That's the best of the best. Weakness, smalls returning, getting inside, no more gap. Anything can happen, guys. That's where reversals come from the middle of nowhere. That is where Fibonacci areas are more likely to hold. That's rule number one, guys. Typically the easiest lesson. Once you have momentum, you have half of the core. You have half of the foundation, guys. Momentum is amazing. But without a clear path, it's very often useless, guys. So rule number two says terminations false. No termination conditions. You want to make sure you have room to profits. We're just going to call it a clear path. And when we talk termination conditions, it's horizontal lines on a large chart, guys. One line is not more important than another line. They all have names, but if they're horizontal, they could stop the market. They could create a reversal. They could create an untradeable bounce. And these are the areas where the large crowd are making decisions. The large crowd knows about these areas. They know about these ranges because they created them with historical movement, guys. So resistance, divergence high, yellow 1-to-1s. In an uptrend, we'll just call all of them resistance. Fibonacci support, yellow 1-to-1s, divergence lows. In a downtrend, we'll call all of them support. And guys, let the large crowd get to the area for decision making. And that's the first step in defining a termination condition. The market's going up, your bars are up, everything's going up, and then price reaches. Such an important phrase. Price reaches Fibonacci resistance. If I'm not there yet, that's a target. But once I hit it, I've got to get to counting triggers, guys. I've got to count my trigger lines and how many get above that area of resistance or how many get below that area of support, guys. And if the answer is 0, no triggers break above, no triggers break below, that is the textbook definition of a termination condition. This is an area that could stop the market. This is an area that may just create a big, ugly, untradeable bounce. Guys, this is an area that could reverse the market completely. And the reality is, and the truth, is that you'll never know. You'll never know what the reaction's going to be. They don't send out a memo or a fax. There's no emails. So just assume that area is going to hold. Assume that it's going to create an untradeable bounce. And what happens is it keeps you from trading into these areas that stop the market more often than they don't. If that area, if that termination with no trigger lines through it reverses the market, large triggers go from green to red from resistance. Large triggers go from green to red, from red to green, from support. We call this a strong top or a strong bottom. Now, a strong top isn't mandatory to take that high probability trend trade, but a strong top sets you up for the highest probability trend trade. And a strong bottom sets you up for the highest probability trend trade. And this strong top or bottom, this termination that reverses the market, is mandatory on the plan that I give you to take trades when there's only the potential to break. So terminations can stop the market, guys, but areas break, usually with momentum, and it looks like this. Here's your step. Red light, green light, guys. Price reaches resistance, no triggers break, absolutely no trades into the area. Assume there's somebody waiting to take your money. When 2 triggers get through the area with momentum, guys, this area has the potential to break. A lot of you will grow into taking this trade. It's a medium probability trade. There is not a clear path, but with the potential, a lot of you find a way to capitalize on this. For the brand new user, for you guys that are just getting into it, want to optimize your chances of success, or for you older people that aren't finding the success that you're looking for, allowing 3 trigger lines to get through the area in question. Now the potential for a breakout is even higher. Now the likelihood with all that momentum of the area breaking goes up. This is the second trade on the plan that I give you. It relies on the potential, it relies on the momentum, It's going to rely on the perfect entry, but there is a way to capitalize on this medium probability look. For the brand new user, if you take 30 days insisting on what we call a clear path, where 4 trigger lines have made it through trouble, price has not reached the next area of trouble, guys, this is your clear path. This is the best of the best, guys. This is the highest probability. This is the look that typically wins more than it loses. And the easiest trades you guys will ever take will have both momentum and path. Strong triggers, nothing in the way. Strong triggers, nothing in the way. And guys, these tails are going to be that pullback, and we're going to define exactly how to pinpoint where those tails are most likely to happen, and we're going to do it with rule number 3. But before I go to rule number 3, I like to ask, are we good with momentum? Is everybody okay with the idea that separation means strength? Termination conditions, counting triggers when price reaches there. Guys, there's no expectation for you to be great at this on day 1, but if you take a little time to study from your spreadsheet, over 50 pictures of strong triggers, and exactly what it looks like to have weak triggers. And if you apply yourself, there's no reason to confuse the two. Here's your clear path in green, letting you know go. Here's your termination conditions in red. Guys, there's like 80 pictures, 90 pictures of termination conditions, because termination conditions are the most broken rule among new users. And then looks at the entries, guys. And once you have momentum and path, once you understand momentum and path, you have everything you need for a really successful, consistent trading plan. Your first entry, compliments of Nexgen, is the high probability trend trade entry. And it's pretty accurate, guys. So accurate that you're going to use a limit order to buy or sell a pullback, and that's that little fight by the small crowd, that little retracement. And you're going to buy or sell that pullback at an area, at a fib, at a mid band, at a yellow 1-to-1, because the same way on the large chart, those areas could stop a trend. The same way on a large chart, we don't want to trade into them because they could shut everything down. On a small chart, they can give us the bounce we need to go with the trend, to go with momentum, to go in the direction of the clear path. But here's the most important part of that whole thing. Those areas need to be inside of the large triggers. Inside of large triggers. So you're going to buy or sell a pullback at an area inside of triggers, guys. You're just going to use that refinement process. 1 bar on the large chart says down, says strong, says potential to break. 20 to 30 bars on the small chart say retracement, area inside of triggers, continuation down. It's this refinement process that is going to minimize your risk, guys. It's this refinement process that's going to maximize your profit potential. And I'm going to give you a little secret, new users. If you want the highest level of accuracy, favorable large triggers. It means that your large triggers and your synthetic triggers, and your small chart has 2 sets of large triggers. One is native to the 5-1. It's going to be smooth. You can compare it to the small triggers to define momentum. And then you have these synthetic triggers. They have steps. These are nothing more than the large triggers from the large chart superimposed on your small chart. Price returns to large triggers on both time frames. It's the regression of the mean. It's a moving average thing, guys. And the tighter these triggers are, one on top of each other, angled up in the direction of the trend, you're going to have the least amount of space to put an area inside of there. And guys, triggers define the retracement, areas define the bounce. Favorable large triggers will give you the least amount of risk. They'll give you the highest accuracy as you look for an entry. So let's go through the pattern, and that's all this is. It's a pattern. What's it look like when I take an entry? It looks the same every time. First, the large chart rules are met, guys. You have momentum. In this case, it would be an uptrend. You would have odds favorable momentum to the upside. You would have a clear path. And guys, the pattern is waiting for a reversal bar. That's step 1. Wait for your small crowd, your fast crowd. Wait for this tiny little refinement chart to give you a down bar, and that's the beginning of the pullback. That's the small crowd's fight. You can define right where that fight is most likely to go by using large and synthetic triggers, somewhere from the top line to the bottom line. That's the retracement zone. That is the most likely spot for these down bars to travel. Trigger lines aren't bouncy, guys. They're like clouds to a skydiver. We need areas. We need fibs. We need mid bands. We need yellow 1-to-1s inside of triggers. And if you learn that phrase, buy or sell a pullback at an area inside of triggers, guys, you'll be calling your shots 2 or 3 minutes before the reversal bar ever happens. You'll know exactly where you're entering 2 to 3 minutes before the entry ever comes into play. The reversal bar starts the pullback. The trigger lines define where it's most likely to go. And then fibs, mid bands, or yellow 1-to-1s inside of triggers. All caps. So important. This is where the market is most likely to bounce, where it's most likely to continue in the direction of the trend. Now here's the thing. I don't know if it's going to bounce from this mid band. I don't know if it's going to make it all the way down to those yellow 1-to-1s. Hell, I don't even know if it's going to go to the bottom of the retracement zone and then start back up. But because of those large chart advantages, because of all of that momentum, because there's nothing in the way, you'll activate a limit order just above the highest point of support, closest to the reversal bar. And guys, this is your high probability entry pattern. Reversal bar, define the retracement zone, areas for a bounce, get in at the one closest to the reversal bar. And anything below the triggers, anything beyond the retracement zone, anything that's made it through all of those areas and all of those retracement zones, guys, any line below the triggers is not a part of the entry. It's outside of that window where the market is most likely to continue. And guys, this is where the market should not go. This is where the advantage of rule number 3 is no longer in play. This is where your rules are no longer met for a high probability trend trade, especially for the brand new users. No trades are taken from the wrong side of the triggers, because once you get through, you don't know if, when, or where that market may continue up. That's your long trade. The market also goes down, guys, and we eat from both lineups on the buffet. In a downtrend, when you have odds favorable momentum, when your path is clear, your job is to just sit on your hands and wait for the reversal bar, because the reversal bar signals the beginning of the pullback. Once the reversal bar prints, or with a little study long before it prints, you're going to look to your trigger lines and you're going to say to yourself out loud, the market is most likely to retrace somewhere from the bottom of these large triggers to the top of these large triggers. And I don't care if it's large below synthetic, synthetic below large, this is my retracement zone. And triggers aren't bouncy, so it's my job to wait for the pullback to the area inside of triggers, fibs, mid bands, yellow 1-to-1s, and activate my limit order and wait for the small crowd a tick or two below the lowest point of resistance, closest to the reversal bar. This becomes your entry for the highest probability trend trade, guys, and all it is a pattern. It's a pattern that repeats itself, that is predictable, that you can say, when I have my advantages, this look typically wins more than it loses. Anything beyond the triggers is the wrong side of the triggers. Anything beyond the triggers is where the market shouldn't go. And these fibs and these yellow 1-to-1s, oh, they're enticing. But guys, once you get to the wrong side, you don't know if, when, or where that market's going to continue down. This is where the market shouldn't go, where the advantage is gone. And new users, I won't ever tell you what to do, but I would certainly say that you'll take more losers than winners from the wrong side of the triggers. So much so that that's the first step in management, guys. Your initial stops are going to be placed where the market shouldn't go. This is how we minimize risk using this methodology. Generally 4 to 5 ticks above the trigger lines for a short, 4 to 5 ticks below the trigger lines for a long. This is in the plan that I give you. And then after the market confirms the trade, maybe a reversal bar down from the area inside of triggers, a reversal bar up from the area inside of triggers, guys, you can reduce risk even further. You can put your stop a tick or two above that bar, a tick or two below that bar, And guys, it's not uncommon to see Nexgen users having $30, $40 of risk on a trade because of their amazing entries waiting for the confirmation bar. First stop placement, where the market shouldn't go. Because you can define where it's most likely to continue, you're already a step ahead on your management. I added this picture to my little PowerPoint because I want you guys to know that if you're new, you're going to make mistakes. If you're experienced, you're going to make mistakes. Guys, there's three entries that are very common, and this is kind of the progression. The first entry that I see out of new users is the I'm just going to jump in because I'm terrified that the market's going without me look. And guys, if you jump in here and all the rules are met, it's not a bad jump in. But if that reversal bar prints, guys, that's the beginning of the pattern. That's the one that says, hey, we're probably going down to the area inside of triggers. So if I jump in too soon and I put my stop where the market shouldn't go, I have an enormous amount of risk. But even worse than that, I've got the smallest possible room to get to trouble, to get to my profit targets. And guys, this look right here, unless it just beelines to the fib, can produce a really big loser. The second entry that's very common, and I'm so guilty of this one when I was a new user, is watching those fluctuations on the small chart and you see it start to go up without you and you panic and you hit that buy button and you buy the high tick of that bar that continued down to your area inside of triggers, guys. And if you're not waiting for rules to be met, this entry increases risk. This entry decreases profit potential. Eventually, with some study, with some practice, with a little bit of trust, you'll wait for that pullback to the area inside of triggers, and you'll recognize that that's where the least amount of risk for your trades comes in, and you'll recognize that that's where the highest profit potential is realized, waiting for the pullback to the areas inside of triggers, guys. And all this is a pattern. It's a two-chart pattern that is repeatable on every market. Starts with momentum, separation between the small and large. Let's take a picture. Once I have momentum, I'm going to make sure that at least 3 trigger lines are through. If I'm a brand new user, I'm going to make sure that my path is clear. And guys, when the large chart says to go look for a trade, you're trading all the way up here, like 97.05, and your brain is saying, dag nabbit, egads, I don't have room to that termination condition. And you're going to say to yourself, I can't take this trade. I just don't have any room to make money. This is where the wonderful part of rule number 3 comes in, guys. We're not getting in at the top of the move. We're waiting for the reversal bar. We're waiting for the pullback to the areas inside of triggers. And guys, when we do that, risk is minimized. Come on, risk, print for me. There you go. And these tails, that's that pullback. You're pinpointing where that tail is most likely to form. Your stop is below that area where the market shouldn't go. And from your amazing entry, you've got tons of room to get up to trouble. You've got the highest profit potential, guys. And all this is a pattern that repeats itself daily. And if you go to your spreadsheet under client trades, you could click on any one of these links and say, oh my gosh, there's momentum. There's my pullback to the area inside of triggers, and it happened again. And it's the exact same pattern, the exact same methodology, the exact same look each and every time. Strong triggers up, pull back to the area inside of triggers, guys. You can commit this look to memory by scrolling through, memorizing these patterns. And what it'll do is it will slow the market down for you. Are there any questions about a high probability trend trade, guys? It starts with momentum. That was 3 triggers through. You can go study this. Watch this. If I circle that tail, it pulled back to an area inside of triggers. Do you guys see it? That happened at 8:50. That was 40 minutes ago. This is crude oil. Everything that I just talked about happened right here. And if you got in at 49 and you took it all the way up to 70, guys, that's over $200 profit. Does that make sense? Nobody's talking today. It always makes me nervous. That's your pattern. Scroll back, study it. When you see all that momentum and the potential to break, guys, circle a tail. What's it look like? Holy crap, it's a pullback to an area right inside of triggers. Am I the only one astounded by the repeatability, by the methodology, by the minimal risk, by the freaking awesome profit potential? You guys should get excited. If you're not excited about high probability trend trades, I'm not doing my job. Guys, here's momentum. Odds favorable, likely to continue down. Holy smokes, look at it go. But price reached Fibonacci support. Absolutely none of the triggers have gotten in. My job is to sit still, to wait for the reaction from the large crowd, to see if they want to go up or if they want to continue down. I never know what it's going to be, but if you look at your small chart, guys, look, they're already reacting. All of these down bars, and once they got there, you can see it. You can see the reaction. You knew about it. You can choose not to trade into it. You can trade to it. That's a momentum trade right there, straight to the target. So, guys, that's Ninja Trader. You have rules, you have looks, you have patterns, you have study materials. Get to study and get the work done. And now we're going to go to TradingView. TradingView is different. It's not Ninja Trader. You can't intertwine the rules because they are different. It's a different look. Now, it's similar are the indicators. T3 indicators carried over to TradingView, guys. You've got divergence highs and lows, yellow 1-to-1s, mid bands. The one thing that you don't have is Fibonacci. Our programmers haven't been able to put it in yet, not consistently. So what we use, and what I use personally, and some of you hate the idea of a $50 investment, they do a free trial if you're on demo, guys, is these supply and demand zones will behave like Fibonacci. Don't trade into them. They'll define room to targets, guys. This is where decisions are likely to be made because decisions have already been made there. That's why they're so darn effective. So if you're on a demo, Chart Prime, guys, they supply them. You can do a free trial. I think it's 7 days, same time as your demo here. You don't have to spend anything. But I think once you study this and once you see these, that $50 sure seems like a small investment. 2 charts on TradingView. Should sound familiar, guys. Big chart, 15 minute. Do you know how much can happen inside of 15 minutes? A lot. I could walk away, I could walk down the street, I could go to the store, I could get a pint of milk, guys. I could take a nap. 15 minutes is a long time. So we're going to use the 15-minute chart to define direction, momentum, and key targets, terminations, but we're going to rely on the small chart, the faster chart, the refinement chart. It's a 1-minute chart, which is still a pretty long time. It's going to define the immediate strength in the market. Those trigger lines, same as Ninja Trader. It's going to define entry points. So big picture, refinement, guys, it's the large crowd again. It's the people with more money and influence than you making things happen. We're going to go with the flow, but we're going to use those fighters to get us to the best possible entry. To read your large chart, 3 things happen before you ever go to the small chart. The first thing is you have to define direction. So in TradingView, when you go to the plan, guys, the one thing that I've done is I've given you workspaces that remove the large triggers. I've given you workspaces that take the colors off the background so that you're not influenced. Your small triggers are either down or they're up. If they're flat, there is no momentum. And I even took pictures, guys. This morning, they were flat. I can't define direction if there is no direction. I can't define any sort of momentum if there is no open triggers. It was the same thing on the S&P. There is no momentum in flat triggers. You can't define direction with flat triggers. So make sure they are decidedly up or decidedly down. In this particular picture, they are decidedly up on the most current bar. Does everybody see it? Both lines of the small triggers shooting to the moon. Once you define direction, you're going to ask yourself, where is the most current price? Where is the highlighted price? Where's the price in the now in relationship to those triggers? Because guys, on a 15-minute bar, you could be above them, below them, inside them, and all of that can happen in just one bar. So we're going to use the most current price. And where is it in relationship to those small triggers? I just blew up this picture right here. There's three options. You could be left of the triggers. Whether it's down or up, you can be left of the triggers. You could be right of the triggers, or you could be inside of the triggers. There's three options. And these options, this awareness is going to set you up for management. If I am left of the small triggers, this is the strong side. There's that word again, strong. Screen went black. Let me reload it for you real quick, Caleb. Thank you for telling me. I like it when you guys don't suffer in silence. I just refreshed on my end. Is that better? Perfect. Guys, if I am left of the small triggers, I have warm fuzzies. I'm excited. This is the strong side. This is the best momentum side. This is the giddy up side. And when I apply that to management, this is the look that lets me know that the 1 minute areas are most likely to break. This is my hold for bigger targets move. This is my protect myself when it hits something, but there's the potential there for it to go further. This is odds favorable momentum. If I am to the right side of the triggers, I'm on the weak side of the triggers. There's that word again, weak, the opposite of strong. Guys, this is where getting paid at trouble makes the most sense. This is the least amount of push in those triggers. And the weak side of the triggers, well, that's where you are right before a reversal, guys. This is your manage as assertively as you know how look. Still looking for long trades. We'll still take strong trades from the weak side of the triggers. But my management hat is on. And if it's inside, if it's neither strong nor weak, guys, I'm still looking for long trades, but I'm going to be ready to manage. I may or may not take profits at the first sign of trouble. I'll let the small chart momentum dictate a little bit, but I'm not going to lose at an area if I'm in the transition, if I'm on the weak side, guys. Getting paid is the whole goal of day trading. Your location versus the triggers will let you know how aggressive, how assertive you need to be. And then finally, the most important question, guys, and the question that if the answer is ever no, you shouldn't even go to your small chart. Is there room to targets? Do I have room to make money from the place I'm going to enter? And guys, if the answer is no, shut it down. Wait till it's yes. But if it's yes, let's go look for an entry. Let's go to that 1 minute and let's define where the market is most likely to continue. There are 2 trades on the KISS plan that I give you guys. 2 trades, that's it. And it starts with no terminations or zones on the 15 minutes. It demands that you are not trading into big chart areas. So if that is true, think of it as a flow chart. Then I go to rule number 2, and rule number 2 for what we call a momentum trade, it's right there in the name, says that I must be on the strong side of my 15-minute triggers. And if I'm not on the strong side, I don't have enough momentum to consider taking a momentum trade. The second thing rule number 2 says is that my 1 minute is strong triggers. And guys, when you talk about strong triggers, it's the same as Ninja Trader. And there's even a picture right here. In order to have strong triggers, you must, without question, have separation between the small and the large. In a downtrend, when you're looking for a short momentum trade, there has to be space, they both have to be angled, and everything is screaming. In an uptrend, you have to have space, small and large angled up. If the smalls roll against you, you don't have that momentum. If the separation is gone, you don't have that momentum, guys. So strong side, strong triggers. When 1 and 2 are true, let's go define the entry, guys. And this is the only trade where you're going to use a limit order. And you are going to let it, the market come back to a previously broken area. So when the smalls are up, when they're on the strong side, when there's nothing in the way, you're going to patiently wait for the market to break what was behaving as resistance and has now become support. And you will activate a limit order right at that zone, right at those one-to-ones, right at an HVA line. This is your momentum trade, guys. This is about 15% of your trading day, maybe. These don't happen that often. When they do, they're fantastic. They're very low risk trades because your stop will go just below the zone. And what you're doing when you enter this trade with a limit order is you're saying, man, I hope all of that strength carries me to the next area. This is your momentum trade, guys. The only trade that you will use a limit order on. Down, strong, room, get in the habit of saying that. Break what was once support, pull back to it as resistance, guys. This is your momentum trade, and I sure hope it goes down. And here's the thing, if it doesn't, but you have strong triggers and nothing in the way, it's probably going to turn into a trend trade, guys. This is the second trade. This is the most common trade. This is the trade I firmly believe you could build a trading plan where you only take this trade and find success. And there's some of you in the room that are doing it. And you guessed it, it starts 15-minute not trading directly into areas. 15-minute with a clear path, guys. Whether it is strong transition or weak side of the triggers, you have to have room to trouble. And you're going to see in this room today, no doubt in my mind, people trading directly into 1-minute trouble and losing trades. Not having room to targets is one of the biggest problems that new users face because it forces you to be patient. But when you have a clear path on both charts, guys, you're going to buy or sell a close on the correct side of the small triggers at the 1-minute mid-band or areas, which means that when your large chart is up, even from transition, as long as there's room to the target, the second these small triggers roll against you, the moment they turn down when everything on the large chart says up, I want you to say to yourself, because the small triggers rolled down, my rules say to wait for a pullback at an area, and we're not entering with a limit order, we're actually waiting for an up bar that closes on the weak side of the triggers, the correct side of the triggers for the trade. And guys, if it doesn't make it to the area, it's not a long trade. And the rules are very specific. Pull back to an area with an up bar that closes, that finishes on the correct side of those small triggers. You can have a timer on your 1-minute chart and you can count down to the close of that bar. And guys, I'm going to tell you right now, if you try to anticipate closes, you're going to get run over quite often. So once the small triggers roll, pull back to an area, up bar on the correct side of the triggers. When the large chart is down, when it's on the strong side, when there's room to trouble, once the small triggers roll, I wait for a pullback to a zone, to a mid-band, to 1-to-ones, and I get in on the down bar that closes on the correct side of the triggers, guys. And if you just scroll back on TradingView and you just go back historically and didn't even look at a large chart, one of the things you would notice is that the market doesn't seem to change direction until you get a close on the correct side of the small triggers. And the market doesn't seem to change direction until you get a close on the small side of the triggers. And the market pullback doesn't go down until it closes on the correct side of the triggers, closes on the correct side of the triggers, closes on the correct side of the triggers. It's just a pattern. And once you believe it, you're less likely to get run the fudge over in your trades. So, recap. I've dropped the KISS plan in the room for NinjaTrader. I've dropped the KISS plan in the room for TradingView. I've dropped spreadsheets in the room for both. You have now, my friends, been given everything you need to be successful with the software. You've been given rules, right? You've been given plans. You've been given study guides. And guys, I'm going to tell you right now, the next 2 hours are you posting in my room and saying, Mark, this is how I read my indicators. This is what I saw. This is where I saw it. This is where I got in. This is where I got out. Did I do it right? Guys, this is your private session. This is your coach telling you that you should have passed instead of taking the shot. This is your coach saying you got to run faster. You got to move. So I don't know. Guys, annotate your charts. Tell me what you see, because when you do it right, you have written a recipe for success. You have put a vernacular association to a look. Guys, you said this is strong triggers. This is what it looks like. That's what that look means to me. This is my potential to break. This is what it looks like. This is what that look means to me, guys. And when you put those two together, when the brain starts working with the eyes, guys, you're just describing the pattern. So if you post in my room and you are on NinjaTrader, I expect to see reference to momentum, terminations, and entry. If you post in my room and you're on TradingView, I want to see direction, location, room, and yes, I want you to define your entry, whether it was a momentum style or whether it was a trend trade. And guys, what that does for you is it lets me know how you're reading your indicators. It lets me know if you're making a mistake on the reading of the indicators. And what you will find once you start participating in my room is that there's very few mistakes I don't know a fix for, guys. And a lot of times when I was a brand new user, I would take this trade, right? Or I would take the short trade down here believing that because the triggers were red, I had momentum. And then John Novak, who taught the class, helped me to define momentum. And when I thought I had a clear path, he helped me define that clear path. And guys, if you use the spreadsheets, the last page of both are tracking sheets. Take a picture of everything you do. Take a picture of everything you see. Right on that chart, guys. Post your trades in there. Talk about your advantages. But the most important thing I think you can do as a brand new user is notate the feedback. What was the feedback? Because sometimes, guys, we're going to virtual high five. We're going to celebrate. And we're going to say, holy crap, that was the best trade ever. Get that one into your plan. Make sure you never miss this trade. That's the best of the best. But what is more likely for new users? And it's okay, there's going to be a challenge. Whether it's a rule broken, whether it's an early entry, whether it's a crazy hold or stop placement that made no sense. You'll get feedback on whatever the challenge was, but you'll also be told how to fix it, guys. And if you come back to this spreadsheet every morning, this takes 3 to 5 minutes, tops, while you sip your coffee. What worked yesterday? What did I do well yesterday, guys? Yesterday, what I did well is I got in on the correct side of the triggers and I had room to targets, and I had a ridiculously good day yesterday. What didn't work? When I formed an opinion, when I used the word should, this area should break, or when I use the word but, I don't have momentum, but I think it should go up, guys. When you start using words that aren't definitive, that aren't exact, that don't fit your checklist, that's what typically doesn't work. We'll identify it together, we'll work through it together. You're going to notice that when you follow rules, you're very relaxed. You know you have advantages. Life is good. And when you don't follow rules, you move stops into ridiculous places. Not at all where the market shouldn't go, but where you're afraid it might go because you know you're breaking rules. And a lot of you are going, oh, I do that right now as we talk. Guys, if you do this study every morning, it will accelerate the learning. It will just prepare you for the day to go after the good stuff. So that's my first hour, guys. It's the first hour every day. It is the same thing every day. And when these triggers are down and I'm on the strong side of the triggers, my rules say under no circumstances do I trade into that area that could stop the market. Under no circumstances do I take a trade directly into something that could create a bounce. So I have two options. Either this holds and the market rolls and I look for long trades, or this area breaks. And then if it breaks, guys, I got blue skies. I've got clear path. Then I'll look for a trade. Does that make sense? That's how long it takes to read a chart to know whether or not you have an advantage. That's crude oil. NASDAQ. Down triggers. Strong side of the down triggers. If I took an entry, my small triggers turned against me, I would need a pull back to the area, I would need a close below them, and I would need a little bit of room. And guys, if you look at this large chart, I don't have room. There's no room to make money if it closes below the triggers. It puts me directly into something that could stop the market. No trade. Not again. And then if I go here, there's all that momentum, right? It went into a termination, not my money. We're into the next termination. Depending on what happens, it's either got to break or roll, guys. I don't know what it's going to do. I just don't know. My rules aren't met. Oh, here's the S&P. Directly into a termination condition, weakness in the triggers. It's a downtrend and I don't have a clear path. And if I thought I was going to get sucked in by the small chart, I don't even have a clear path to the upside. Guys, this is my pause. This is my go make a sandwich. This is my go pet the dog. Go high five my wife. Do anything other than trade into an area that could stop the market. That is the number one killer of accounts for new users, is not having the patience to wait for it to be right, guys. In How to Commit Financial Suicide by John Novak. Trade against strong triggers. Form an opinion that says, hey, I really think it should do this. I'm going to fight triggers. That's the biggest killer, along with trading into termination conditions, guys. And if you get these two out of the equation, if you can beat those two things, you're in a great spot. So, I'm going to take a break. You guys are crazy quiet today. That's your right. If you really want to get the most out of the software, start asking questions, guys. If you really want to get the most out of the software, start posting pictures. Start doing the work, guys. That's the only part that I can't do for you. So, I'm going to take a few minutes. I'm going to run a lap. We're going to read charts for the rest of the day. We're going to look at your pictures for the rest of the day. We're going to talk about advantages for the rest of the day. And if we're watching the live market, guys, and I can get rules met per the plan following the checklist, we'll take them live. We'll manage them. We'll have a good time with it. We'll talk about what we see, why we're doing what we're doing. Play along with me. I get lonely. I'll see you in 5 minutes, guys. here we go. Second half. All the good stuff. I'm going to click on the charts that were posted this morning. 2:31 p.m., 9:35. And guys, I'm not the trade police. Please remember that. I'm not here to say shame on you or what were you thinking or I can't believe you did that. Guys, I'm here to talk about your chart reads. I'm here to talk about your whether you recognize momentum, whether or not you understood if there was a clear path. Oops, missed a couple. That was yesterday, but guys, if you post in the middle of the night, I'll try to catch it in the morning if you're here for it. You can still do that though, Ron. Guys, Ron will be the trade police. He will be keeping you guys in line. All right, so here we go. 15-minute triggers to the short side. 1 minute trend trade short area, close below small triggers, plus 160. No room or very little. Gambled on 15-minute strong side. Place profit targets at the next zone down. I love this trade, guys. From the strong side of the triggers, 1 minute areas have the highest chance of breaking. Paul knows that. Paul says there will be times in my trading where I will ignore the idea of not trading into areas because of the strength on the chart, and I will manage it assertively because I know that it's trouble. Paul, nicely done. Good job. See, there we go. Praise, right? Not the trade police. Missed the trend trade short. Exact same look, exact same entry, exact same reasoning, exact same result. Great job. I like it when you guys take pictures of trades that you don't take and you say, hey, this was a trade. This was my pattern. This was my look. Even though I'm not in the market, this is the pattern that I'm looking for. Let me reinforce those rules. Let me remind myself so that when it happens live and I'm in front of my computer, it becomes easy. All right, Nexgen, flat triggers, right? There's no giddy up. Who said it once? There's no boogie in flat triggers. Nowhere to go. Zone keeps holding. Can't make a decision. And Jen's like, I don't need this nonsense in my life. I'm gonna go play with the cat. I'm gonna go walk the dogs. I'm gonna send Hunter $100 so that he can have a nice dinner tonight. Hunter, I got your back. And Pete says, check it out, guys. There's the decision-making zone. Everything says down. There's the decision-making zone. You know what? Let me get in below that area where they're most likely to make decisions. Let me go with all of those indicators that are pointing down. And then, Pete, the one thing you did is you took a momentum-style trade without momentum, and sure enough, it started coming right back against you, guys. If you are going to take a momentum-style trade, guys, having momentum really helps. If you're going to try to trade a breakout, having the strongest triggers ever really helps. Pete, great management on a trade that just didn't have a lot of boogie behind it. All right, 15 minutes up. Strong side, clear. 1 minute, close above trouble, above the smalls, on the areas, and you get out right before trouble. Decided to take a paycheck and leave the rest to someone else. Awesome. I love your entry. 29, maybe a little late. That's okay. Just a quick shot. Boom, boom. Nothing wrong with $140 a pop. Nice job, Paul. Do you see these strong triggers? So guys, when I talk about your best chance of that market going for bigger moves, strong side, clear path, odds favorable, it's going to be hard for this market to go down. It really is. So just thoughts on when you can maybe push it out a little bit further. Great trade, Paul. Great trade. All right. Strong triggers. I'm going to have to disagree on this one, guys. If the triggers are flat, and especially if they've turned red, that's a tough look. They were probably green at the time, and maybe even threatening to open. Starting to come up, pull back to the area inside of the triggers, stop where it shouldn't go. Man, it's a good shot. there's not a lot of space working in these triggers yet, like you'd want to see for the best look. Um, this is a good shot. It being the first one in before things really get going. Stop could have been just a little bit tighter, Joel, but good job. Good job. Going with trend, going with triggers, going with the clear path. Man, great trades will fail. Did you guys know that? Great trades will fail. And here's, like, that's okay. I'm always cool with a great trade that fails. What sucks, pardon my French, is that horrible trades, advantageless trades, will win. And they'll make you believe that that's your path, guys. So consistency. I love this, Jen. Flat triggers equals shenanigans. That's the word, guys. Shenanigans. If you look at your chart and you hear that word ringing in your head, sometimes it's better to sit on your hands. All right. With the momentum, tries the breakout trade. I like it. And guys, let me show you what experience does for you. When you have strong triggers and the potential to break, if your momentum trade fails very often, it turns into the perfect trend trade. And Pete, awesome. He said, I'll take a shot in case they don't come back, but if they come back, I'm just going to add on to my trend trade position. I got them, Wayne. They're coming towards the end, but I got them. And he rides it right up to trouble. Nice trade, Pete. I didn't look at yesterday, Wayne, and then when I scrolled back up, I noticed that you had a stack around 9 p.m. last night, so they're all at the tail end of this list. They are coming, though. All right, let's see what we're doing here. There's your termination. Small triggers down. I'm assuming it's the strong side of the triggers. And just taking the I hope it goes down trade. I'm just going to jump in with everything pointing down trade. And sat through a tremendous amount of yuck, and I'm gonna say probably got lucky getting out at the VWAP. It's an interesting look. Strong side down, not a lot of room, and really hit your targets. 100% hit your targets, but you held, and I'm not sure who this is. And fortunately, they retested the targets and you made a little money. Didn't feel, Pete, this is you? Right on. And then added in on an up bar instead of the down bar. Waiting for the down bar, might have got a better fill. And made it. Following the large chart. Aggressive hold. Aggressive hold for sure. But there's a calm that comes with experience, right? There's a calm that comes with experience. And guys, you're going to see stuff in this room that you're like, why did he do that? How come he did that? What made him feel like that was the right thing to do? And sometimes it's just his chart read. Well, the triggers aren't following and this isn't looking. And you'll get to that point. All right, 15-minute triggers up, strong side, clear path. I've been waiting for the mid-band, strong close above small triggers. Screw it, it's not pulling back to the mid-band, inner long. It does a big pull back to the mid-band, stops me out of revenge. It makes sense, I enter long again, not wanting to lose more. I pull stop, guess what? I did not lose because of +1 or 2 above the entry. I add a contract at +10, feels looking good, comes back, takes my stop again, then runs up to where I would have had profit targets. Clever bastards, bear trap for dummies. Bottom line, I entered the long the first time into a zone. This knocked it back down to the mid-band. Then wanting to control losses, I put my stop in the wrong spot. Let's call it that. So directly into a zone produces a loser. Directly into a zone. And then there's your breakout above, Paul, right? Remember when we talked about this? When all the triggers are up, taking that close above. And if you just would have kept your stop behind that bar, it was money. So the first one doesn't make sense. Directly into trouble. The second one, directly into trouble, right? And you've got to stutter and panic and make a tick. But that one right there, that's the one that said go. That's the one that said here we go. And even more so, it pulled back and then headed up again. And one of the things about day trading, guys, is that losses are a part of it. I can't stress that enough. Losses are a part of day trading. Make them come get you in the right spot, guys. When your emotions fuel your stop placement, you're just chumming the water. They know where the scared people put stops, and they come get them. And then they go right where they were supposed to go. All right, Wayne. Momentum with trend trade add-on. Momentum jumped the fudge in. Trend trade add-on on the pullback. So momentum when it breaks. And then when it doesn't go, that's a lot. You're welcome, Paul. It's hard, man. Keeping stops in the right spot. I say it all the time. The stops are scary in the wrong trades. Stops are necessity in the right trades. So Wayne took a momentum trade without momentum, and it failed. And that's cool. That's part of it, right? And then when it failed without momentum, you did have the clear path, and you held. And that's an aggressive hold, without a doubt. I'm just going to say it. To hold from 19.4 all the way down to 16.9. Guys, that's $250 per contract on the wrong side of the triggers without momentum. And Wayne, I hope that makes sense. You're right to hold it. And then you entered below the fibs without momentum. And it worked out for you. And you got paid. And man, that's scary. That's terrifying. And I love that I'm glad you got paid. I'm a little surprised that you added on to a position from the wrong side of everything without momentum to push it. Even this is pointing down from a divergence, wrong side. So I'm glad it worked, Wayne. Guys, there's going to be times where I look at your charts and I'm just like, whoa, it's hard to find things working for you. Termination, everything points up. You do have momentum here. Strong side of the small triggers. You had a couple ticks to get to trouble, and you managed out at the fib. And that's good use of momentum and a little bit of path. Not a lot of room, though. 59.1. You had all of 2 or 3 ticks. Profit potential. Again, glad it worked out. They're your trades though, right? Now we've got momentum. Now we've got true momentum on the large chart. Now we've got a true clear path on the large chart. Now we've got momentum mirrored on both other charts. And Wayne, that's the easy one. That's the easy trade, guys. Momentum and path. That's the one. That's the one where you're like, wow, we're going the distance. Nice job, Wayne. Smalls above the large, no room to trouble, into the outer band. You jump in and it works out. Good job. From a bad bottom, and guys, let me talk about why he does what he does here. When you get a reversal in the market that doesn't come from a termination condition, and just for my newer users, this divergence line didn't happen until all the way up here. So this was just weak triggers in the middle of nowhere. Wayne knows that when you have weak triggers from the middle of nowhere and it retraces up to Fibonacci, that Fibonacci is more likely to hold. He also knows that when the large triggers don't follow, price is more likely to come back to the large triggers. And when a weak bottom from fibs and the small triggers roll and everything is pointing the same direction, Wayne says this is the look where they love to go find that next lower fib. And that's what fueled his decision to get in there to see if it went. And Wayne, it looks like you're like, it's not high probability. I don't have everything working for me. Let me knock it out. And you were leaving 36, over $200 risk again. Some of you have the stomach for big stops. Strong trending market, a tick above, and it works out. Strong trending market. Actually, that was the fib update, Wayne. You probably nope, that wasn't. It was there. Man, divergence right from a fib, so you let it get back above the fib. Take quick profits, decide to hold a little to see if it makes it, and it did. Nicely done. This combo matching the trend is an indication to me that the market will continue and entered even though the back of the bar on the large chart had not cleared. Using small chart to refine big picture. Nicely done, Wayne. And then one more. Boom, 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 boom. When everything is screaming down, Wayne says, I'm going down with it. Great hold. And then added on a little extra just to get some more. Wayne, great trading, man. I know you have a plan. I don't question your plan. I've watched it over the years, or at least over the last year, and I've watched it come into play, and you do it really well. You know exactly what you're looking for, and you do a great job catching it. All right, let's see what we have. Trend is down, strong side. You get in below trouble, which is over here. Close on the correct side of the triggers. A little late, right? Little late, Pablo. By about, no you're not, you're in at 403.8, you're in perfect, nice job. Taking one off at trouble, perfect, and protecting your investment because this could create a bounce, perfect. You took both off? Great job, Pablo. Doesn't have to be hard, does it? Down, strong side, room. Down, strong side, room. Room to trouble, paid at trouble. And guys, this is gold. That's 180 a contract. No, that's 280 a contract. Nicely done. 555 total. Dang it, Pablo, we're going to make a trader out of you yet. Nice job, man. What'd you shoot yesterday? There was no hoping. That was the pattern that you can prove wins more than it loses, right? That's the pattern that you can prove is laden in advantages. That's the pattern that repeats itself every day. And what amazing patience on the entrance, man. Guys, when you do great things in your trading, tell yourself, I did great things in my trading. Because that's it. That's everything you could ever look for. All right, there's the S&P, guys. Termination, full reversal, smalls down. Does everybody see that there's no area inside of triggers? I can't get rule number 3 met here. Larger down, smaller down, but the background is green. I don't have momentum. Price reaches Fibonacci support. None of the triggers are broken. I don't have a clear path. Can't look for short trades. And it's way too soon to look for long trades. Does that make sense, everybody? So 2 NinjaTrader charts, 2 times rules aren't met, 2 times I choose to do nothing. This is the NASDAQ. And guys, I'm going to let you in on a little secret. We're at the point of the day where we're done with your pictures. Nobody's asking questions. We're going to watch the live markets, see if we can get rules met on a plan. When I tell you that 90% of your day is doing nothing, you guys are about to realize that. Because if I can't look at a chart and say my rules are met for a high probability trend trade, if I can't look at a chart and say my rules are met for a potential to break trade, if I'm looking at a chart and I can't get my rules met on the trading view plan for a trend trade or a momentum trade, guys, I'm not going to enter the market. Now, if I get them met, I'm happy to enter the market. We'll manage it. We'll make profits. We'll do what we do. We'll take losers. Whatever the market gives us. But guys, you're about to realize that 90% of your day is doing nothing. That 90% of your day is sitting on your hands. And when the triggers are down and I'm on the strong side, but there's a zone in the way, my rules say absolutely no trades into that zone, which means that no matter how much I wish I could be a part of a down move, my plan says don't do it. Triggers are down. Transition, no room. There's the bounce, no trade. Triggers are down, strong side of the triggers. Uh-oh, I've got room to trouble. But I don't on my small chart, and look at the bounce that it created. Whew. No room. Pablo, there was your trade. Nice profits. Good job, guys. So we just looked at 4 markets and 2 platforms, and no rules were met. Did everybody recognize that? It was 4 markets, 2 platforms. My checklist wasn't met, guys. This is day trading. The market moves billions every day. Takes $400 to put yourself in a 6-figure income, guys. A trade for the brand new user is momentum, path, and entry. Every time. And if you can't say momentum, path, and entry, guys, if it's only 2 out of 3, you're in what we call a medium probability scenario. It means it has to be managed a little more assertively. And if 2 out of the 3 are out, guys, if you don't see it, is it okay to do nothing? Is it all right to not take the trade? Is it fair that I'm not willing to risk my money on something that is a low probability scenario? Once you develop that mindset, guys, once you learn how to do nothing, trading gets easier. The most successful traders that I've ever worked with do the same thing every day, the same entry every day. They have a management plan written out, guys. They know the advantages that get them into a trade, so that they know when those advantages are gone and it's time to manage a trade. So I'm going to start going through all the nonsense that I've written out over the years and see if we can't find something helpful for you. The first one is daily goals. And I like sharing this one. Whoop, that's on the wrong monitor. Because base hits pay bills. If you've ever seen Moneyball with Brad Pitt, he gets on base. Why don't I want the home run hitter? Because getting on base pays bills, guys. Because small moves produce big results over time. And $400 a day is a 6-figure income. And I would wager to say that the majority of this room isn't making 6 figures with their trading yet. So why do you keep trying to make $500,000 when you haven't figured out how to make 75, right? Why do you keep trying to make $500,000 when you can't consistently make 50? And guys, it is the idea of instant gratification that when you sign on, you want to be rich. When you sign on, you want to be a millionaire. When you get these indicators, you want to make $20,000 yesterday. And guys, if you don't put in the time to learn how to make $300, making $1,000 is more difficult. But when you can make $300 consistently, when you can make $400 consistently, and everybody in this room can, all you have to do is use the trade copier, turn that 400 into $2,000, turn that 100,000 into $500,000, right? With the exact same trade. We'll use Pablo's trade as an example. If Pablo took his $550, whoops, that was not the right picture, huh? And he mirrored it on 5 accounts. Pablo's up $2,200 for the day, right? That's a pretty good day. Would anybody be bummed with a $2,200 day? Now Pablo has a choice. Pablo can stop, smile, go golf. Or Pablo can want more. And it's that want more. It's that, man, I know that my daily goal is 500, but I want more. I know that I can shut it down and be a winner and be in the good, but I want more. And guys, having a trading plan, having a trading plan that says when I reach this number, I stop, whether it is wins or losses, and adhering to it, that's what sets you apart. Set your goals. Stick to your goals. Greed kills. Yeah, it does. Oh, thanks, Yasin. Did I mention that I'm not so good at math? Thanks for that. 2750 is even better. Maybe that's why I'm stopping too soon. Thoughts on management. Thoughts on management, guys. Every new trader has a checklist given to them for entry. And as you grow beyond the KISS plans, guys, I encourage you guys, write a new plan. If you're going to take another trade, write a new plan. If you're going to look for a different trade, write a new plan. I'm going to give you guys this. I couldn't find it, Jen, when you were looking for that one trade. I apologize. Here's the template that gives you a place to write your checklist for entry so it's repeatable. Guys, take 10 pictures of your perfect long entries. Take 10 pictures of your perfect short entries and talk about how you're going to manage it. Make it very black and white. When you know what gets you in, you can use that same thought process, reverse engineer it to create a management plan. So if momentum goes away and I've lost that advantage that put me in a momentum trade, it makes sense to no longer hope that a momentum trade works. And if I no longer have a clear path, right, then it's a good idea for me to not hope that not having a clear path takes me to the next level. And if my price gets beyond my defined entry area, or my advantage of rule number 3 is no longer in play, it makes sense, right? These indications of change that let me know I no longer have an edge, guys. And allowing management to be just as mechanical as entry lets you keep the emotion out of the process. Now, I was looking at a chart earlier today, and I was thinking to myself, and I haven't talked about this in a while, and guys, you're stuck with me talking lots if you're not talking. There's this little goblin, if you will, that I call the what-if monster. Now, when you break your rules and enter the market, the what-if monster says to you, yeah, but what if this one works? What if not having advantages produces results? Make that stop a little bigger, right? Don't get out at that next trouble area. Hold that trade that you know is wrong. And guys, it's a very real thing. And you will abandon logic and embrace the what-if monster. The second what-if monster is just as bad. When you take the perfect trade, when you have momentum, when the path is clear, when life is great, that little what-if monster is going to say, yeah, but what if this is one of that 20 to 30%? What if this one decides to turn from the middle of nowhere? What if this one goes to your stop? Maybe you should tighten your stops. Maybe you should put your stop in the wrong spot. Maybe you should get paid before it reaches that area it's most likely to get paid. And guys, when you lean on emotion, and that's all that what-if monster is, when you lean on emotion, you're going to struggle. So learn how to make it mechanical, guys. I think naming your trades is one of the greatest things you can do. When you take a trade, give it a name. Because when you give it a name, you know the exact rules to enter. My rules for a high probability trend trade mean that I have momentum path and entry. My rules for a medium probability trade mean that I have 3 triggers through, strong triggers, no divergence. I know exactly what it takes to get me in, so I can know exactly what it takes to get me out. I'll give you guys this sheet. I think that this is important, guys. Talk about advantages. Talk about the good stuff. Talk about the bad stuff. Be willing to exit a trade that is no longer giving you what you need to feel like you have an edge, to define that advantage. What else? Pictures you can take. Guys, if you're brand new with me, welcome to Nexgen. This is what happens when nobody posts trades or asks questions. I flap my gums for an hour straight. I will probably close down the YouTube in the next 5 minutes, guys. Take pictures before you enter the market. And I don't know if I've said it, The people that take the most pictures, guys, these are the people that know what they're doing the best. These are the people that recognize patterns the fastest. I am up to 8,826 pictures this year. I don't have any doubts when I look at a chart. None. I know exactly what I'm looking at, guys, because I have taken pictures of every possible scenario thousands of times each. Take pictures. When you set that limit order, snap a picture, guys. You don't have to annotate it. You're trading. But go back and look at that picture and put it up against your spreadsheet and ask yourself, did I miss anything? Where did my analysis fail? Was my analysis correct? And guys, and if you didn't miss anything, you'll start to see the patterns that are doing good. You'll start to recognize the patterns when things are escaping you, what you're missing. And you'll be able to recognize and correct that through that idea. I take pictures during the trade. Guys, I've been known to take 7, 8, 9 pictures during a trade. I'll take stop movements. I'll take profits taken, guys. And again, I don't have to annotate in the moment. I can go back and talk about why I did it, but guys, during the trade's how you're going to build a management plan. After the trade, this is where the magic happens, guys. When you go back after a trade and you write your rules on the chart, not what you thought, but rather write your rules on the chart. Write momentum, clear path, and entry, and make sure that you actually have momentum, path, and entry. That's an awesome one, and this is reinforcing the rules, and you'll know exactly whether or not you're following a plan. And then, guys, this is my favorite for new users. If you don't think the rules are met, if you think the advantage is not present, if something scared you out of a trade, if you chose not to take a trade, if you are indecisive, take a picture and write your rules on the chart and see if it really was a trade. And pictures 3 and 4, these are the ones that I want to see in the room, guys. Show me your trades, show me your reasoning, tell me what you read. You'll get feedback on entry, exit, any thoughts I have on reducing risk, increasing profit. And if it's a no trade picture, guys, it's a great lesson for everybody. A lot of times we'll see the no trade pictures and it is in fact a no trade. But with new users, what I will see, and guys, I see this a lot, is I'll see, hey, didn't take the trade, rules not met. And that's all they'll put, rules not met. And if you're going to do that, talk about which rule wasn't met. Because if you drop that in the room, and this is the picture, wifey just defunded the trade police, gotta go do something, no idea what, I bet it's going to cost. Have a great one, Ron. I want to show you guys some of the most common things that I see from new users missing the perfect trade. The first one is I don't have room to trouble at the top of this bar. I've only got 8 ticks to get paid. And they'll just stop looking instantly. This is a lesson that I will come in and I'll say, hey, if price doesn't reach that line is not a termination condition. And then we'll go deeper into it, that it wasn't 8 ticks of profit potential from your area inside of triggers, from the rules-based trade, from the best of the best entry. You had 32 ticks of profit. You had $320 worth of profit to take that trade. That's one of the most common things. And guys, when you post in the room that you didn't take this trade because of that, you have an aha moment, and it opens the door for more trades, for better trades. Another thing that I'll get, very common, is, well, price reached a 1-to-1 and my triggers didn't break through it. And that opens the door that termination conditions are defined on the large chart, and that one line on a small chart is really just what we're hoping for to bounce us back to that perfect entry. People tell me that the small triggers have changed color, so I can't take the trade, and we go back to the lesson that momentum is defined on a large chart, that terminations are defined on a large chart, that this tiny little chart is nothing more than an entry chart, guys. And when you post in the room, didn't take that trade, but the rules were perfect, you're more likely to catch that trade. But if you sit in silence and talk yourself out of amazing trades, guys, or if you sit in silence and convince yourself that your crap trade had all the advantages, guys, you're less likely to move forward. You're less likely to grow. And price never gave it any room, even though it's down. It hit. Not room to trouble, directly into it. Not room to profit. Sit on your hands. Sometimes it's not your trade. Guys, what do you want to talk about? No triggers through a divergence low, and look at the bounce. And if you thought you were entitled to a short trade because you had an area inside of triggers, you didn't read your charts. That's an avoidable loss. Amen. I have no idea where you took this trade. 25,252. 25,252. So right here is where the trade was taken, guys. 3 triggers through. All the momentum, best of the best. Nice job, Andy. I love the large chart. Look. You take the pull back to the area inside of triggers. You take half off at trouble. And when trouble produces the divergence, you say, you know what? I'm not going to lose anything on this trade. When it pulls back to the midband, when absolutely nothing blinks on your chart, you say, wait a minute, everything still says down. Let me get in on the correct side of the triggers. Let me get paid on 2. Let me get paid at the trouble that could stop the market. Andy, freaking amazing. And everything that he did is a result of large chart advantages. His entry is because the large chart told him to get the entry. His re-entry is because the large chart said, we're not done, Andy. We're still going down. We've got nothing but room. Let's take advantage and make some money. I love it. Great job. Estefania, good morning. Estefania loves momentum. I know this. This is one of the cool things about the room, guys. I'm going to know what you're into. I'm going to know how you trade. I'm going to know what you look for. And Estefania says, when my market is screaming with odds favorable momentum, when there is absolutely nothing in the way, I'm going to jump in and I'm going to find a way to make money. And you said dodo stop, which is a technical term. So you took one target, right? And then you lost momentum. And it looks like you held it, 75. And you got paid again. Nicely done. So Estefania, one of the questions that I would ask is, why did you wait so long to get into this trade? You had all the momentum and absolutely nothing in the way. You could have taken this bad boy all the way up here and just tripled your money. Does that make sense? I mean, a lot of space to make a lot of money. Great job getting paid though, because nothing said it was likely to go up. And your hold here, Estefania, is nice. You had a humbling experience. Did you lose a trade before this one? Yep. Do you know what you didn't show me, Estefania? You're losing trade. How can I help you if all you show me are your bragging winners, right? I love your winners. And these strong triggers said that that hold was just fine to grab more. Nicely done. Guys, it's okay to share losers. That's the hardest thing you'll ever do. You've been listening to Mark Douglas? Man, he'll change your life, won't he? I'm a big fan. You know, he and John worked together for a better part of a year, I think. Back in the 90s. And if you listen to Mark Douglas, guys, if you read Mark Douglas, you'll notice that there are huge similarities between the way this room is taught and the ideas that he presents in his work, because he was such an influence on John Novak. The idea that you'll never know what's going to happen in the market, the idea that trading is just probabilities, that it's about having an edge. It's about a sample of 25, 30 trades, not the 5 or 6 trades that you think define your whole trading day. Um, it's pretty cool. Termination, man. How many times can a fib stop the market or create an untradeable bounce before you believe it? All right, triggers down, transition, and room to trouble. Are we going to get one? Small triggers rolled against me. I need a pull back to an area. Here we go. And then I need a close on the correct side of the triggers, and that might take a minute or two. Estefania, everything says down. No areas inside of triggers, so you get in on the down bar, which is beautiful. You make sure you get paid, and you get paid again. Beautiful trade. Nicely done. Guys, she has momentum and path. She cannot define area. So she forces the market to go in the direction of her trade. And Estefania, way to remember that you're in charge. That nobody can make you hope. Nobody can make you wish or want. You're in charge of your entry, and you did it beautifully. Nicely done. All right. We're back at the area, guys. What do we need? We need to close on the correct side of the triggers. And what you can see is that we're not there yet. And if I get a close on the correct side of the triggers, it's directly into an area, which means I really can't take that trade. My rules aren't met. So if I'm being completely honest, I hope they go a little higher. And if I'm being completely honest, I hope that they dance a little bit so I can get a really tight close right in an area, have some nice minimal risk. But I know exactly where it's got to come from, and I know that my rules aren't met. So we're just going to sit here and watch it and see if it comes to be. Down, transition to weak, which means we have to manage. Small triggers rolled, has to come to an area. If I get a close on the correct side of the triggers, and I've got 54 seconds to think about it, from 28, so 1925 is my line in the sand, which means for me personally, guys, I don't want to get in any lower than about 25. I want to have at least $100 worth of room. Weak side of the triggers. Guys, odds favorable, momentum up. Let it settle, right? Still outside, still outside. Now I'm transitioned against them. Got to get to that weak side. Got to have an advantage, guys. Got 13 seconds, 12 seconds. I love the countdown. Love the countdown. And you guys know what the cool thing is? The higher they go, the more room we have to get down to this zone. All right. Coming up. Boy, a close on the right side wouldn't be bad. Looks like they wanted that mid band. I do have a zone here. If they go up into this zone, then I have to relax. My entry has got to be below that line. 37 seconds to think about it, guys. 30 seconds to think about it. Down, weak, room. Just not yet. Not yet. 20 seconds to think about it. Guys, this is why I don't try to anticipate closes below. I tend to get run over. This countdown is absolute gold in my opinion. And what's nice is they're weakening the triggers, right? We're getting over, it's starting to be better, and we've got a minute to think about it. So come back in a minute, right? We'll see where it's at. I took this picture yesterday, and I sent it to my brother because there is one thing that has become gospel truth in my life. Where is that picture? When your large chart says up, go up. And if it doesn't say up, stop trying to go up, right? There's a lot of moves within the moves, guys. There's a lot of dancing in between the dance and in between the best of the best. And yesterday afternoon, guys, I watched the NASDAQ triggers go up for the entirety of the afternoon. And in the funding company, I watched people lose short after short after short trying to fight those triggers. All right, still didn't get a down bar on the correct side. Not yet. It's got work to do. We've got 42 seconds to think about it. Guys, if you're in the funding company and you're fighting the large triggers on their 15-minute, you're creating big challenges for yourself. Just a heads up. If we take an entry with a close on the correct side of the triggers, it would have to be below this zone. And your stop belongs above the pivot high. We've got 16 seconds to think about it. 12 seconds to think about it. I can't go short directly into a zone, especially from the weak side of the triggers. Totally willing to miss this trade. My rules, my checklist says not directly into a 1 minute zone. But here's something cool. My small triggers are turning down, and if I get a close below this zone, I'm not fighting triggers at all. This is my patience entry, guys. Let's see if the zone holds or not. We've got 43 seconds to think about it. 43 seconds. And so far, it's not giving any indication. If it doesn't hit the mid-band for your plan, it's not entry. Always seems to want to go back to it. Well, it made it. And it made it to the bottom of the zone, right? And the triggers are trying to roll. And guys, I have to see a close at least here. And if I don't get a close there in the next 13 seconds, my plan says I can't take it. Your plan may have a different read. My plan says don't trade directly into a 1 minute zone. And there we go. There's an up bar right off of the zone. Whew, man. I love rules. Here's one of the challenges. We just got a new zone, didn't we? Your supply and demand zones will update, and guys, I don't have any room for a short. I'm out on this one. You guys do what you want to do. I'm out on this one. I can't go short. I can see a supply and demand zone. I don't have any room to get back to it. I'm on the weak side of the triggers. Guys, life is not good for me as a trend trader right here. Does that make sense, everybody? If I took an entry, it would actually, you know what, down here, 29.25 below the HVA, below the zone, would qualify as room. But look what the market's doing with the strength up. Look what the market's doing from the weak side of the triggers, guys. It just keeps pushing. Just keeps pushing. Now, if I got a quick close right here at 43, I would have 7 points, $140 to get back, right? Let's see what it does. I love a tight little close right here below the triggers, below my green dashed line, which is the bottom of the zone. We'll know in 30 seconds, guys. We'll know in 30 seconds. 21, 20, 19, 18, 17, 16. This is day trading. This is day trading. I've got to close below 44 though, and guys, this is your rules keeping you out of a loser. Did anybody take the short and wonder what went wrong? Did anybody take the short and say, damn it, the market hates me? Anybody take the short? No, why? Guys, that was a great example of how sometimes you don't get it. And Master B, you went long. That's okay. Show us a picture, right? Show us a picture. I can tell you exactly what he did. Master B said, look, we had a zone, we had a roll, we had momentum. Hell, I went long, even though these triggers are down. Because Master B, you're trading over here. You're trading on a Renko chart. And when that termination stopped the market, reversed it, gave you momentum, somewhere right here, was it right in that area? Or did you catch it a little sooner? I'll be darned. So with momentum and path, you took a pullback just above the area of support inside of triggers, and now you're just making money? Master B! That's what I'm talking about. So what do you do if your ninja trader and your trading view don't line up? Guys, I can't trade two platforms. That's just me. I can't trade two platforms. I'll go with whichever platform gives me the entry. True story. I'll go with whichever platform gives me the entry. It's just how my brain works. Is this going to be your short trade? Triggers down. 4, 3, 2, 1. Nope, I'm still in a zone. I can't go short. There it goes. Still going up. I love it. He said with a surprised sound in his voice. All right, guys. Do you want to watch Renko? Strong triggers, clear path, area inside of triggers. If I get a pullback, it needs to come get me at this mid-band inside of triggers. If I don't get a pullback, Master B is going to be ecstatic because it means he just hit his targets. And it means I've got to cancel my order because now it's a termination. I don't know, Caleb. What market are you asking about? NASDAQ? So let's do this. Are those up or down? Or can't tell? Can't tell, right? So what does that mean? If I can't tell, I better not fight everything up over here. Wouldn't you agree, Caleb? But here's the challenge. I don't have any room to one-to-ones. I can't tell which direction the market wants to go. I don't have any room to get back here. Do you really want to take a long trade directly into all that trouble? When these may end up being down for the remainder of the day? When you can't tell? They hit the one-to-ones. The triggers technically are still down. So it's one of those things where can I is not the question that you should ever ask. The question that you should ask, Caleb, is should I? Should I take a long trade? Well, if you're not sure if you should, go back to your checklist. Does that make sense? Can I? Absolutely. You could take a trade any direction you want at any time you want. Should I? Should I take that trade directly into one-to-ones? Should I go long when these triggers are still down? Right? Change the language. What you'll find is that it starts to make more sense. All of the momentum. Where did you enter? You entered right here at the circle, but it didn't get you. So did you catch it on the way up? It looks like it because at 125. So when it didn't make your entry, you caught it on the way up, Caleb? One thing you could do too, man, and I know that you're not the annotation king. On your small chart, do me a favor. Right click and go to data series. Scroll to the bottom and make sure that it says text and marker. It'll show your entries and exits. And then we can see exactly what you did and where. Caleb, check it out. Sure am glad you didn't go long. Hit those 1-to-1s like they were getting paid to do it, didn't they? And the triggers are still down, but I don't have any room for a short, and I don't have any room for a long. So guys, I'm going to take 5 minutes. I'm going to go stretch my legs. If you can think about something to talk about, let me know. If you take a trade, post it in the room. If you have a question, drop it in, guys. I'll see you in 5 or 6 minutes.